Hey everyone, ready to dive into something we all love, making that money work. We're talking high-yield savings accounts, because who doesn't want their money to grow faster?
And with the rates we're seeing right now, it's a good time to be exploring those options.
Absolutely. Our deep dive today is fueled by two recent articles, Investopedia and NerdWallet, both from September 30th, 2024, and they both confirm what we're seeing. High-yield savings accounts are offering some seriously impressive annual percentage yields.
APY.
Yeah, we're talking up to 5.50%, which is like, what, more than 10 times the national average?
Yeah, it's incredible.
It's like finding a $10 bill every time you open your piggy bank.
It's true. Those rates are attention-grabbing for a reason.
Yeah.
But there's always a but, isn't there?
There always is, especially when it comes to finances. And NerdWallet points out something we can't ignore. The Fed's recent rate cut in September. That definitely threw a wrench in things. So, should we be worried? Are these APYs about to take a nosedive?
Okay, so let's break it down. The Fed's rate cut doesn't mean your high-yield dreams are instantly crushed. Think of it this way. The Fed's actions influence the rates at which banks lend to each other. That has a ripple effect, eventually trickling down to the interest rates banks offer on savings accounts.
Okay, so it's a chain reaction. So we might not see a sudden drop, but a gradual decline is possible.
Exactly. While rates may adjust, remember, high-yield accounts are designed to offer a greater return compared to traditional savings accounts. So even if there's a slight dip, you're still in a better position.
That's reassuring. So no need to hit the panic button just yet. But this does highlight the importance of staying informed and adaptable, which is what this deep dive is all about.
Okay, so we know high-yield savings accounts still have a place in our plans.
Yeah.
But with so many options out there, how do we choose?
Right.
It's like trying to find a needle in a haystack made of dollar bills.
Yeah, it can definitely feel overwhelming. But luckily, both Investopedia and NerdWallet have curated these lists of top-performing high-yield savings accounts to make that decision-making process a bit easier.
That's super helpful for sure. But I'm curious, is a good APY all we should be looking at? What about those hidden fees or tricky terms and conditions they always warn us about?
You're absolutely right. A tempting APY shouldn't be the only factor in your decision. It's crucial to look beyond the flashy numbers.
Yeah, and consider other important aspects.
Okay.
It's like buying a house, right? Based solely on a pretty picture.
Right.
Without checking for leaky faucets or inspecting the foundation.
That's a great analogy.
Yeah.
So what are some of those foundation checks we should be doing when comparing these high-yield savings accounts?
One major factor is minimum balance requirements.
Okay.
Some accounts have them, some don't.
Right.
For instance, CIT Bank Platinum Savings, featured on NerdWallet's list, requires a $5,000 minimum balance to snag that attractive 4.70% APY.
So if my balance dips below that, I might miss out on the higher rate.
Exactly.
Okay, that's definitely good to know.
Precisely. And then there are those pesky monthly fees. Always read the fine print. Some institutions might waive them if you maintain a certain balance, but others might surprise you with hidden charges.
Yeah.
It's all about being informed.
It sounds like we need to be like strategic detectives.
Yes.
On a mission to uncover the best deal.
Absolutely.
What else should be on our radar?
Don't underestimate the power of convenience and accessibility in our fast-paced world.
Right.
Consider factors like online and mobile banking features.
Yeah.
Can you easily manage your money on the go? Do they offer mobile check deposits? These are essential in today's digital age.
Yeah.
And it's something both articles emphasized.
Because who wants to be tethered to a physical bank with their limited hours these days?
Exactly.
Convenience is key.
Think of it like choosing between ordering takeout online or having to physically go to the restaurant every time you're hungry.
Yeah.
Online banking offers that same level of ease and flexibility.
I'm all about making life easier.
Right.
So we've got our detective hats on, we're scouring those terms and conditions, but how do we know if a high-yield savings account is truly right for us? That's where we'll pick things up after a quick break. So we've talked about these, alluring APYs, the detective work of choosing the right account, but let's get real. Why does this all matter? What's the big payoff of putting in the effort with high-yield savings?
Yeah, you're right. Let's connect this back to your wallet. The beauty of high-yield savings, as Investopedia beautifully illustrates, lies in the power of compounding.
Right.
Imagine a snowball rolling down a hill, right? With a higher interest rate, that snowball picks up more snow, growing faster and bigger.
I love that visual. It's like your money is working harder for you even while you sleep.
Exactly. Investopedia actually gives a compelling example. Let's say you start with $1,000 and add $100 every month.
Okay.
With a 5% APY, which is achievable with today's high-yield options, after just 1 year, you'd have over $2,277.
Wait, so almost like $77 of that is pure interest, just from letting your money hang out in the right account.
Precisely. Now compare that to a traditional savings account with that measly national average of 0.46%.
Right.
That same scenario only yields about $2,201 after a year.
Wow.
That seemingly small difference in interest adds up to over $75 in just 1 year.
Wow, that's a testament to thinking long term.
Absolutely.
Even small differences in interest can make a significant difference down the line, especially with consistent savings habits.
Absolutely. It's not just about chasing the highest rate, but about building a system that works for you.
Right.
Speaking of systems, NerdWallet does a fantastic job of broadening our perspective by comparing high-yield savings accounts to other options.
Right. They dive into money market accounts, certificates of deposit, even checking accounts. It's
Yeah.
like a financial buffet out there. So help us navigate the spread.
Right.
When might one of these alternatives be a better fit than a high-yield savings account?
So money market accounts are similar to high-yield savings with their variable interest rate.
Okay.
However, they often come with perks like check writing privileges, but may require higher minimum balances.
So a bit more flexibility, but potentially more to manage.
Right.
What about CDs?
CDs offer a fixed interest rate, typically a bit higher than most savings accounts.
Yeah.
But they require you to lock your money in for a set period.
So it's great for long-term goals, but not so much for short-term needs or emergencies.
Exactly.
CDs are like that reliable friend who always has your back,
Yes.
but maybe not the best for a last-minute concert ticket.
Exactly. And lastly, we have checking accounts. They aren't really known for high interest,
Right.
but some, especially those from online banks, offer surprisingly decent APYs.
So it's worth shopping around. Speaking of which, both Investopedia and NerdWallet remind us that Uncle Sam always wants his share.
Yeah.
That interest we earn is taxable.
Very true, but remember, any interest earned is still gain.
Right.
And remember, both articles emphasize that rates can change frequently.
Yeah.
It's like trying to catch a wave,
Yeah.
Timing is key.
This brings us to the concept of rate chasing. Constantly switching accounts to snag the absolute highest APY. It sounds tempting, but is it really worth the hassle?
That's a great question to ponder, and the perfect note to end on. We've explored the ins and outs of high-yield savings accounts, but the real journey starts with your own research and decisions.
Absolutely. Remember, knowledge is power, especially when it comes to your finances. Happy saving, everyone.